All right, all right, all right. We are here. We are live. We're ready to go. We're going to Scalp and Trail Power Hour. We had a little technical difficulty, so we are getting started a little bit late. I don't know what happened. It says out on YouTube that we've got our channel ready to go and got everything all up and ready, and it's sitting there scheduled and ready to go. But when I went into the system, it wasn't there. It was gone. So I had to start a new one. So I hope you guys who are all waiting over in the old one can come over here and find us in the new one. So we're going to be scalping trailing here. I don't know what happened to the technical side of things. I do know that the software program that we were using, they did do an update today. And so I don't know if that's what caused the problem. But nonetheless, we're here. We're live. And I had to just lost the access to the other classroom. So I guess we had to start a new one. So here we are. Up in the upper left-hand corner, we have the S&P 500. This is in the futures market. Let me give you a little marquee up here. We'll start off, let you know who's up here and who's happening, what's going on. So first thing, we are trading in the futures market. All right, this is not the stock market, although we are trading the stock indexes. So we have the S&P 500 in the upper left-hand corner. We have the Dow in the upper right-hand corner. We have the Russell 2000 in the bottom left-hand corner. And we have the NASDAQ in the bottom right-hand corner. And so those are our indexes that are trading over in the futures market. Now, the reason we like to day trade and scalp over here in the futures market is because there are no pattern day trading rules. We don't need to have an account, $25,000, all tied up just so that we can trade a little bit of day trading. So we can come in here now and we can start this, and there's no pattern day trading rules, so we can trade to our heart's content. Now, I'm going to trade today. We're going to trade on the NASDAQ. All right. I'm looking at the NASDAQ. I got everything all set up for the NASDAQ. We've been doing a little bit of setup here before. I wanted to teach you a lesson. And the lesson is, of course, how we're doing this. Now, the first thing we need to know is my name is Lan Turner, former instructor at the Chicago Mercantile Exchange, the Board of Education's center, and currently an instructor of finance at Utah Tech University. And so this is the lab for our class at the university. And so what we do at the university is we have a trading class. All right. And we come here and we do the practice what you preach. And so we're going to learn a little bit about how I do the day trading and some different day trading strategies. Now, today, the afternoon session, we are working on scalping and day trading. So we're going to learn a little bit about scalping and day trading. Of course, in the morning sessions, Monday, Wednesday, and Friday, 7:30 my time, which is 9:30 Eastern, we do also have morning classes. So you're welcome to come and join us in our morning labs where we talk about other things like stock trading. We talk about seasonal nature of markets. We talk about options. We talk about all kinds of fun things. But on Tuesdays and Thursdays, we like to do trading in the afternoon to just scalp power hour. And power hour is the last hour of the day, and so it's just before the market closes. And generally, the market has a tendency to run a little bit during that time frame, get a little bit of extra volume, a little bit of extra volatility, and it gives us the opportunity to trade a little bit. So if we get a couple of opportunities today, we're going to take a few trades. We're going to see if we can't demonstrate making a little bit of money. Now, the first thing we're looking at here is that the market is being quite choppy. All right, it's not being real clean. All those topping tails and bottoming tails, those are not good. All right. We don't like to see those. We like to see nice, smooth, rolling, flowing charts. So let's come back here. We'll show you. There we go. That would have been a good time to be trading right through here, right? See all these nice, rolly, flowy charts? That's what you're looking for. Excuse me. So when the market's doing that, that's the kind of time you want to be trading. Now, some way through here, this was a little bit difficult because this here, the market never moved far enough to allow you to move your stops to break even. But we were able to catch a few nice moves in there. Or there were a few nice moves. We didn't catch them because we weren't trading. We're waiting for power hour. And as we come along, we can see that the market's now getting a little bit choppy net, but now we're kind of moving into power hour. We should see a little bit of volatility. So the first thing we're seeing is just seeing, I'm using the blue lights here off this bulls and bears system. Now we're using very unique charts. All right. These are not the normal charts. And the blue lights are telling us the trend. So those are mathematically calculated trend lines. And then the yellow dots you can see in there, those are our setups and triggers for entry and exit. Now, those are the yellow dots. Those are just, all they are is just the average true range. So the idea is that if the market is trending, all right, once it starts looking nice, no topping tails, no bottoming, not a lot of bottoming tails and topping tails. We want bars that just have, topping tails or bottoming tails and flat bottoms or flat tops. That's what we're looking for. we're looking for a breakout. This market's coming into a little bit of a flat top in here. Well, a little. It's nothing real fun here. We got a nice little trend line coming here, a little wedge triangle formation. It's breaking out the bottom. Fibonacci ruler, we come in here and measure from high to low on there. Not much for it to drop to, just back down into the Fibonacci sweet spot, which is right here. That's kind of where it's at right now. So we need a little opportunity for it to move. We need the market to kick up its heels a little bit and start to play a little bit here with us. We'll see if we can get some trades off. But nonetheless, what I like to do is I like to look for the average true range. And I've got it set pretty aggressively. I'm going to show you my settings here with the average true range. So this is the ATR period of 1 and a stop factor of 0.6. Now I'm using a high-end trading platform. This is a high-end retail trading platform for you guys who like to day trade, retail traders who like to day trade. So this platform is something that you can use when you're day trading. All right. So let me give you a little bit of a heads up here. This is the software I'm using. It's called Track and Trade. So you can go get you a copy of it over. Just go to trackandtrade.com. I'm using the futures version again. This is the version that we're using for day trading because there's no pattern day trading rules. And look at that market fall. That's I started talking about the software and I missed that opportunity right in there to take that short position. But we'll watch and see what happens here. But nonetheless, go get you the software. You can join us and you can use the settings that I'm using. I'm going to show you my automated, what I call the semi-automatic trading strategy. I'm going to show you those settings here in a minute. So get your little camera phone ready to take a picture so you can take a picture of the settings. Then you can put those settings into your software and then you can follow along and do what I'm doing. The software has won Stocks and Commodities Annual Reader's Choice Award 7 times. So that's pretty good. Annual Reader, 7 years. 7 years it's won that software. It's been around a while. This is a pretty well-known industry standard software application for traders in the futures market. So you want to go and jump onto that software and come and join us. And I'll show you the settings I'm going to be using for taking entries and exit. Now, the first thing we're going to do is we're just going to start off with the simplest form of entry. All right, so we're going to come in. I'm going to go to the trading tab in Track and Trade, and you can see these QOCO buttons down here. These are our program buttons. These are buttons that we use to program in semi-automatic drag and drop orders. All right, so you can see I've got mine set up to QOCO1 is a buy market, QOCO2 is a sell market, QOCO3 is this is a breakout strategy, and then QOCO4 is what I call the playing with the devil. This is actually a scalping strategy. All right, but we're going to use just QOCO1 and 2. We're just going to use these first two buttons here today just to keep it simple, just to get started. And I'm going to show you how we do that. These have been programmed to have a limit order, a stop order, and an entry order all on the same ticket. Now, what I mean by that is I'm going to right-click on here. We're going to come down to the settings, and you can see in here, get your little camera phone, take a picture of those settings, because those are the settings that we're using in here today. And that's what we're going to be doing. And so you want to put that into your software, just like I've done here. Now, the software that I'm using has the ability to give me these special price bars. All right, so these special price bars are called range bars. There's no time involved. So it's just trend only. So they're range bars, but we also use Heikin-Ashi bars. So Heikin-Ashi bars are a special kind of smoothing component that's added to the range bar. So it's kind of a unique price bar. It's a Heikin-Ashi range bar chart. And I've also got some special indicators laid over the top of it. One of them is the bulls and bears. Now, the bulls and bears is something that comes proprietary with Track and Trade. When you pick up the Track and Trade software, that's what's turning the price bars red, yellow, and green and giving us those blue dots. All right. So that is a combination system between the Fibonacci and Elliott wave strategy. That's what's giving us the kind of the idea of whether the market's bullish or bearish or neutral. That's why the bars are red, yellow, and green. Yellow is the Fibonacci sweet spot. That means the market's neutral. We would look for it to break out to the upside and go green, or look for it to break out the downside and go red. That would be your Fibonacci sweet spot. All right. So those of you who are familiar with Fibonacci, have a zone between 38.2 and 61.8. We also have the blue lights, which are how we count our Elliott waves. Elliott waves are a statistical mathematical modeling formula that we use to give us, the probabilities of whether the market's going to rise or fall. And we go into all that kind of stuff in this class. So stick around, subscribe, come back, watch, and we'll teach you all that kind of really neat, fun stuff about how you can do this style of trading. So that's the buy market. So let me show you the sell market. Sell market is basically the same thing. Here's the settings for the sell market for the software. Just take a little quick snapshot with your phone on that one, and we'll go through and I'll show you how we're going to take some trades using this settings. All right. So sell, market, 50 stop, trail, ATR to break even. I've got the break even turned off, so I can actually remove this. I'm going to take that out of there. We're not trailing to break even. All right. We're just going to continue to trail. That would be if I had this ticked right here, but I don't. So we're going to take that out. Maybe we better do the same thing on one over here. And we're going to take the break even out over here. All right. So we'll take that out too. All right. So that checkbox is not checked. So we're going to go ahead and take that out. Now the market's starting to flush right now. So we're starting to get a little action. Let's see if we can't get an opportunity to get into the market. There's lots of moving averages in here. We got all kinds of moving averages. You can see that we got the 12, we got the 50, we got the 100, we got the 200, we got the other 200. This is a 200 exponential. This is a 200 simple. So we're just kind of waiting for the market to give us an ABC pattern maybe, or a reversal pattern. You can see we're coming down. We're going to go back up. So we got one up for every down. If you kind of think of about a market, they go up and down, they go up and down. There's one up for every down. The one thing we don't know is how far each up or each down is going to go. But once we get into a trend and we get a long set of bars, we generally get a short set of bars followed by another long set of bars. That's called the trend, the counter trend, and then the continuation of the trend. All right. So we're trend traders. We're momentum traders. We want to trade the trend. So we're looking for an opportunity where the market falls, bounces up a little bit, and then we're going to anticipate that it might continue in that overall downtrend once again. So where this is kind of rebounding right now, we're going to look for and anticipate the possibility of another fall. If it does, it'll break these yellow dots. This is the average true range. And if it breaks below the average true range there, we might take another short position. And the way we do that is just by simply clicking this button right here. Once those yellow dots flip, and then our stop order automatically drops to the yellow dots. You can see how that was done all by itself, all automatically. And if the market continues to fall, we'll make money. If it goes back and hits our yellow dots, we get stopped out with a small loss, which is what just happened. So the market did not continue in that downtrend right there. So we just immediately get out. This is a breakout or bailout strategy. Either we get in and the market moves immediately in our favor, or we just get right back out with a tiny little loss. All right. It's easier to recover from a small loss than it is a big loss. So we don't hang around in the market all the time waiting for a market to reverse and come back. If we're wrong in our decision, if the market doesn't just continue in our favor, we just get right back out. Now, the problem is if the market doesn't trend and it just keeps going back and forth and back and forth and back and forth across that yellow dot, then you just get your hiney handed to you. So you have to be smart enough to say, well, the market's too dead to trade. We can't trade. And that's okay too. You just have to sit aside. So market's being a little dead right now, but right here, the market was active. We could have made some money back there, but right now it's being a little quiet up here on the home front. So we tried to take one position and it didn't do too well for us. We'll see if the market looks like it wants to go long. We'll try taking another long one. If it goes, well, good thing we didn't click the mouse because it would have just stopped us out on that yellow dot. It's just being a little bit dead right now. It doesn't really want to run. You kind of want to wait for the market to move first and then start to trade. Right now, it's dead. It's not moving. And so to try and take all of these little breakouts, that's death. That's a really hard way to try to trade. Say every time it takes one of these little breakouts, or every time it crosses the little yellow dot, you think you're going to take a position. That's oftentimes a hard way to trade because the market's dead. So what you want it to do first, you want it to actually move. You want to get a nice move like that and then try and take the continuation or the reversal, but it's got to move first. Once it's dead, you got to wait for it to move and break and get some people excited to come and trade with you. This is a Me Too market. We got to get some people to trade. We got to get some people excited about getting in here and to trade. We could take this long position right here. We got the yellow dots behind us. The market's trying to rally higher. I don't want to chase it up in there, though. Little pullback. We'll try right there. We'll see if it don't want to go now. If it doesn't want to go, again, we'll just get right back out. If it does, we'll make a little bit of money. Okay, we're up about $200 right now. And again, this is no pattern day trading rules, and we are in the futures market, not in the stock market. So we've got just quantity one contract. We don't use shares over here. We use contracts. All right, get up in there, touch. Okay, we took our 435. We're up $435. That was a nice little trade, just a quick little scalp. Uh, Now it could go longer and could go further, and we could let it go longer, but we just took our profits there to bring ourselves back to green. We're up $435. Now, how much did it cost us to do that? All right, how much did we have to invest to make that $435? Here in the futures market, we work on contracts. We don't work on shares, and one contract is $1,000. So the smallest increment that you can trade is one, and so one contract is $1,000, and we just put in one. So for $1,000, and in that short little period of time, the market moved there, it made us about $500. All right. So you only really need to do that once a day. If you make $500 a day, you're good, and you could walk away right now. You'd be happy. Now we were down just a little bit because we lost that first one, right? But we want to cut our losers short, just little tiny losers. We don't want to take a big risk. And it's a breakout or bailout strategy. Either it moves and goes in our favor, or we just get right back out. And so we made $500 on there. We were down, about, I don't know, 60, $80. And so now we're up at $435. Let's wait and see. We don't have to trade really fast. There's nothing that says that we have to hurry and trade. You can make money that quickly with a small investment, $1,000. What's your hurry? Just wait for a good opportunity. Wait for a good setup. Wait till the markets are really moving and shaking, and then put your order in there. And again, if it doesn't work for you immediately, just get right back out. Should we see if it wants to fall a little bit here? You can put your order in there. We're going to risk about $100 on this because that is, how far back our stop is. So you want to kind of see the market flush for you if you're going to get in, because if it comes back and stops you out, you're going to lose about $100. So we're working off of a range bar 25. We need it to fall here. See, our stop's automatically moving in with every new price bar. And each price bar is, again, it's a range bar, so it's 25 ticks, and then it gives you a new bar. Now that's not time; it's trend only. So as long as the market's continuing in the downtrend, it'll sit there and flush on down. There we go. It's getting a little tired right there. Let's bring our limit in there. See if we can't pop that out. It's backing off. We're just going to take the profits. All right. So now we're up $675, and that was 3 trades we've taken. And so it's backing off against us. Went up and hit our little yellow dots right there. If we'd have stayed in and not taken our profits, we'd have probably got stopped out with a little tiny profit, but kind of a scratch trade there. Now it's trying to drop again. We could try and go in again one more time, see if that thing wants to make another leg down. All we have to do is just click that sell button. It automatically drop our limit on the yellow dots and start to trail. But I'm going to give it a little bit. We're going to watch this one for a second. Not real confident it's going to flush, but it could. That's a nice little ABC pattern. That's what we call that right there. Okay, that's A, B, C. And that tells us that this market has a reflection, okay, is what we call that, a little reflection of the distance from the high to the low, from here to here. And then we'd anticipate possibly the same distance, another high to low down here, about like that. But I didn't feel comfortable having that in there. And the reason is I didn't think it was going to drop like that, was because we have the Fibonacci ruler and we come in here and you can see those bars are coming yellow. And those yellow bars are representing of the Fibonacci sweet spot off the previous run, and that's why they went yellow. And that meant to me that they're coming into the Fibonacci sweet spot, or what we call the neutral zone of that Fibonacci ruler. And when I saw that, I got a little nervous. I'm like, I don't know. Don't know if it wants to break out to the upside of the Fibonacci sweet spot and continue higher, or if it wants to break down and come out the bottom of the Fibonacci sweet spot. I figure we could wait and see for a second. We're in no rush. It looks like it wants to drop out the bottom. We could try again. Real small risk right there. As we're trading that yellow dot. Let's bring this a little larger, see if you can see it a little better. And if it'll stay below that yellow dot and we think it's going to fall, we can go ahead and put our position in there. Not a lot of risk. We're just going to get out if it goes back up and touches the yellow dot. So we're anticipating a fall. We want it to fall. And as long as it falls, we're in good shape. If it turns and starts to go back up, we're just going to get out. I don't want to lose money, so if it goes back up close to our break even, we'll just get out. Don't want to lose any money. I just get out. I'd rather not make money than to lose money. So that's how I trade. I don't like to lose money. Do you guys like to lose money? I don't like to lose money. So let's come over and say hi to some people. We got Michael Bruce who found us. Michael Bruce, the other room is stuck. I'm apologizing for that. I don't know what happened. I think the software had an update and it lost my position. Yeah, you have to live live on I have 2 lives going at once. I know the other one's not going though, is it? Michael Bruce, it's dead. It's not. I know I have another room, but I mean, I created that other room, but when I went to go into the room had been closed to me. And so I couldn't get in there. So I had to start a new room. And I don't know. So I don't know what to do for them. I can't go over and tell them it's YouTube. They don't let me go talk to my other room that got shut down. Some reason that room got shut down. So I had to start a new room. So again, the software program that I use posted an update, and I think in that update it lost the other room. So I had to start a new room. I'm glad you found me over here though. You can go over into the other room and tell everybody that's over there that there was a technical difficulty with that room and that we got another room going to go look for it. Go out to the channel and look, we got this room going. If you want to go be a kind guy and do that over in the other room, of course, by now, probably everybody's given up on that room and they've gone home, but we're over here actively going. We're cooking with gas over here. We're up $670. I traded this afternoon with one of my students and we made $1,100. So that was a pretty good day. I didn't put that in the spreadsheet. We'll have to put that in the spreadsheet today for the off hours, but let's start paying attention. Let's go look at a different market. We've got more markets than just this one. Let's go look at the Dow. The Dow looks pretty much the same as the last one, as that one. Look at the Russell. The Russell's breaking higher. The S&P is quiet. It's not doing anything. Let's go look back at the Russell. The Russell's nice. Usually with the Russell is a nice one to trade because once it goes in a trend, it stays in a trend. It's got 2,000 stocks in it. So once it starts to trend, it usually stays in a trend. But getting it to trend is sometimes a problem. We don't want it to be choppy. Now, this is not a big market either, too. If we get in right here, you'll see that my settings that I've got these set for the NASDAQ. This is the Russell. If I come in here and drop this in here, watch this. That limit order is way up there. That's because I got these set kind of for the other market. We'll see if this thing will run a little bit. But you can see it's a lot smaller market. So if you're a little bit worried about price consciousness, see, that's only $35. Whereas on the other one, it was about $100, right? So it's about 3 times bigger on that other market. Of course, you make 3 times as much as well when the market runs in your favor. So this one has to move 3 times as far to make the same amount of money. Markets have a tendency to run in smaller little trends. And so that one's got more leverage. So it makes more money in a smaller move. This one here, you see, we're fiddling around with $5 right now. So if you have a little bit smaller account or a little bit nervous and you're a first trader, trade the Russell 2000. It's a smaller market. It doesn't quite rip your wheels off as badly if you're wrong. Of course, it doesn't make as much if you're right. So we got kind of a little move going on here. Now we're going to hover our mouse over the exit button. If it ever comes back to the green line, we just click the exit button and get out. Right? We don't want to lose money. Now our trailing stop is moving for us. It hasn't gotten up to break even yet. And it starts to get close to that green line. I'm just going to slap it out. There we go. Okay, our stop finally moved to break even. So now we don't have to hover over the exit button anymore. We can just wait and see if it wants to move. Now it's trying to break above this previous high right now. So this is where it's working its price level. So we want to see it break above there and hold. We'd like to see it hold above there, close out above there, and hold and continue. If it'll do that, we'll stay in. If it turns and starts to close below that high line, we'll probably just get out and take our profits. It doesn't mean it can't continue higher, but if it closes below it and can't make it above and stay above there, then we just want to get out and take our profits. We're up $75 on this one. So it's doing well, still going. I've got my limit order set out there at 140. Let's put that in here at 100. Let's say we'll just take $100 off. Oh, that's right about where it was. I don't know if it's going to get up there one more time. We'll see if it'll get up there one more time, take $100 off this trade. Again, see, this is a much smaller market, so it's not making as much money as the other one. Doesn't have to move as far. Of course, we're not risking as much either. All right. It doesn't look like it's going to pop up there. We could just take it off right now and take the $55. We're going to get stopped out right here. Come on, buddy. Pop up one more time. Don't hit our stop. We'll get stopped out with a lousy 40 bucks. There it goes. Come on. Back up there. Keep going. It almost stopped us out, but didn't quite do it. Now let's see if it'll push up there. There we go. There we go. Took our $100. Now we're up 770. All right. Well, that was good. That was fun. Let's go look at a different market. There's the S&P. Not real thrilled about that pattern. There's our Russell. NASDAQ. Good thing we were trading the Russell. This NASDAQ didn't turn out too well. Let's go look at the Dow. Let's see how the Dow's doing. Dow's breaking above the blue lights right now. This is a nice little trend line. You can see this is a little wedge pattern, little triangle formation. It's trying to break higher. We got this area of resistance right up here, and it's too close right now for me to get in and go up there and test that and pull back. I'm not sure if I trust it. See if it's going to break above that. We're making this kind of a big, long, rounded bottom, aren't we? Almost like a little cup here. So this is what we call, oh, what happened? Land can't draw. So kind of like this little cup right here. Usually when we get a cup pattern like that, just kind of this rounded bottom, we get a what we call the cup and handle. So we'll oftentimes get a handle pull back like that, and then the next rally, we'll see if we get a handle on it. We may not. It may just, that might be the handle right there. This might have been the handle. So we get the little cup right in here. This little pullback's the handle, and then away it went. See if we get another little pullback in here. See if it'll come back and test this low right here. If it will, we'll see if it'll swing a little bit and then turn and start to go back up one more time. Then we can get into the next long. Of course, it could flush. Market can do anything it wants. All we have to do is decide whether we want to take the position or not. So we could take one. That's a sell signal right there. You see our yellow arrow. See if we want to. Don't really want to take it. This is a really strong up position, uptrend. This would be the counter trend. Put the Fibonacci ruler in there. How far do we think that's going to come back? Back down into the Fibonacci sweet spot, which is right here. Look for it to come down in there. I'd like to see it come down there and then turn, and we can get back in for the next run up. This is the counter trend right now. There it goes. It's going a little quicker than I thought it might. If it'll break those yellow dots, we can get in. Get ready. Get ready, land. Get ready. Oh, sometimes though it comes up, it comes down like this, spikes up, and then turns and falls. You have to be careful. I have to see how strong it feels. It's coming a little quick. When it comes in that soon, just that quick of a little whoop, whoop, usually we'll get a little whoop, whoop, and then a down and then an up. So we'll have to wait and see. Oh, we might have missed this one, thinking it was going to turn and follow one more time. We got this top right here. Are we making a double top right here? This could be a little double top like this, where the market comes in, up, comes down, and then like that. Those yellow dots, it's kind of, this is the Dow. So see if we can't get it to make a decision here. It's going sideways now. Michael Bruce says he likes the NASDAQ Micro Mini Range Bar 50. That sounds like a good one. We should go try that sometime. All right, here we go. Let's try this next down. As soon as I get a confirmation that thing's there, we go. We'll take that one right there. We're going to see if it wants to go down. If it'll pop down, we'll add another one. But if it goes up, we'll just get stopped out with a small loss. Get right back out. This is breakout or bailout. If it doesn't just immediately move in your favor, then just get out. All right. If it starts to move, you can add a second one quick in there. Dollar cost average in one. If it looks like it wants to go, you can add a third one in there if you want. Now we got three, just to show you we can do that. And then we can set these at different levels. We take one off quick to cover some of our costs. Take one off here at this 100 moving average. We take another one off down here. We could be real aggressive and say, well, we're going to take that one off at the VWAP all the way back down here. Maybe it'll drop all the way to the VWAP. Who knows? Right? Nobody knows. We're going to give it a shot here. Let's see if it'll come down and give us just a quick profit. Otherwise, if it goes up and hits our yellow dot, we'll just get stopped out with a small loss. Of course, it's going to be a little bit more of than just a small loss on this market because we got 3 of them. There we go. We took one off the table, so now we're only in with 2. Notice how Track and Trade automatically cleans everything up for you because they're OCO orders. One cancels other, so if your stop gets hit, it automatically takes out the limit orders and cleans up your orders for you. So now we need it to drop again. We're getting a little pullback right in here. Getting a little flag formation. There we go. That little flag formation, if it'll confirm, we can put a second one back in there again, or a third one. We're actually in with short. Oh, that was 2. So we're 2 short right now. Come on off that little flag formation. Let's see if it'll continue down. We took one off. We took a second one off. Come on, buddy. That other limit order is way down here. Didn't it? Oh, we got stopped out. We're up $905 at this point. $905. That's not bad. That's not bad for how long have we been trading? About 30 minutes. $100, $1,000 in 30 minutes. That's pretty good wages. All right. Let's see. Now we got this little thing going right here. Let's delete this one. We got one more thing here. So we got a down, we got an up. Look for the next down. Is it going to go down or is it going to chop up? Chop, 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 chop up, and then down. Choppies are oftentimes the counter trends. So if it's choppy and we have lots of topping tails and bottoming tails, that's the counter trend. So if you're like, well, I'm not sure which one's the counter trend. Counter trends usually have lots of topping and bottoming tails in them, and then the trends usually are smooth, have lots of flat bottoms. Now, again, that's the Heikin-Ashi doing that. That's giving us those flat bottom bars. All right, but when we start getting lots of topping and bottoming tails like that, that's generally the counter trend. So if that's the counter trend, that means we have down, up, and we'd anticipate the next down. All right, so we need it to confirm by breaking below the average true range. If it'll do that, we can put in an order. $40 a day is good money, Michael Bruce. Don't feel bad about that because you're doing it in the micro mini, which means that's about $400 if you're doing it in the big account. That is a good trade. Generally $50 in the micro mini. Micro mini is 10 times smaller than the account we're trading right here. 10 times smaller. So we generally recommend you trade the micro mini if you're a new trader, just to get your feet wet, so that you can then move up to the bigger market, bigger account to make a little bit more money. So we're going to take an early position there. Let's see if it'll follow through. If it'll follow through, we'll put a second one on. There we go. All right. So we're getting a little movement in here. Come on, keeper. Oh, you petered out on us. I didn't even have a chance to get us out. So that took a small loss. We're dropped $50 on that one. We're now back down to $100. We're down at $855. No, we were at 900, weren't we? So that took about $100. So we could come down here and look at accounting and see how we're doing. We'll just slide our accounting window up here. So there's our closed positions. That was $50 it took out of us right there. All right. Let's see what we're doing here. All right, let's go look at another chart. This one's starting to die on us. Don't feel bad about your $40, man. That's in a micro mini. That's a lot of money. We generally figure your goal when trading the micro mini is $50. So if you're making $40, you're kicking ass and taking names. Okay, this is the NASDAQ. Because if this was in the micro mini, I would be up $85 right now, Micro Bruce. We'd be up $85. So if you're up 40, you're doing well. Don't feel bad about that at all. Okay, so this is a Russell. Look like we're trying to break out of this narrow sideways channel to the upside. Looks like it's trying to get a little bit of a continuation. So we got a down and smooth, choppy. We're going to get a smooth back up. One more. It's trying. Let's see if it'll go. We're going to give it a shot here. Got to break that yellow dot. It broke it. Let's give it one shot. We'll go in there. It hasn't crossed yet. That's why that stop's stuck way down there. There's nothing to jump to. Got to wait for the yellow dot to cross. Once the dot crosses, it'll jump to it. But the market's got to rally. Otherwise, you get out. Just there it goes. See that? It does it automatically. It does it all for you. Now it just got to stop out. Market's dying. 20 minutes to 2. There's 2 strikes. We're out. We've been making money. Once you start giving money back, we ought to stop. There, it's trying to go one more time. Let's see if it'll go for us this time. Come on, we got 2 of them in there. Let's bring one limit down here, just right as it tries to break that high. We'll take that profit off. There we go. The other one we'll let go. We'll see if it wants to go a little farther this time. So that's your scalp and trail. We scalped one, covered our costs. If we go back and get stopped out, we at least made enough money to cover the loss, the risk. Now, if the market will continue, this is the trail point, right? Scalp and trail. So that you get into 2 contracts on 2 separate tickets. Oh, the trail failed, but the scalp worked. All right. So how that works, the reason we do scalp and trail, if you look, we made $50 on the scalp. We made nothing on the trail. So the $50 covers the costs, commissions, and fees on the scalp. And then that's why you scalp. And then you do the trail, which is if the market goes to the moon, you get to participate in that as well. So that's why we scalp and trail. All right. We can usually get a little scalp out. We can usually get enough money to pay for our commissions and fees. So and then the risk, and then it becomes a scratch trade at that point. And then we just look for the market to continue. So we need it to rally, but this market's being dead right here. Let's go look at something else. Let's go look at the Dow. Let's go look at the Russell. Let's go look at the Russell. Let's go look at the S&P. Nothing's really happened. All right, the market's slowing down. We got another 20 minutes until the market closes, but I think that's good for today, don't you? We're up $860. I'm going to call that good. Michael Bruce, appreciate you finding us over here on this other channel. That other channel died on me, and I couldn't get access myself, so I couldn't go trade in that window. We'll stay over here, and hopefully people can find this one and watch the replay. But I just want to offer to you the little bell. If you liked today and you felt like today was good and fun and $860 is worth a thumbs up, give me a little thumbs up, and we will see you tomorrow morning at 7:30 a.m. bright and early, 9:30 Eastern. And tomorrow is Friday, right? So tomorrow is stock options day. I think we work on stock options tomorrow. We'll do a little bit of scalping first thing in the morning, starting right at 7:30. We'll do a little bit of this in the morning session. And then we'll flip over and we'll look at our stock portfolio and we'll see how our options are doing. All right, guys, I apologize again for the technical difficulties and having to start a second class, but them's the breaks. Hopefully, guys will find it and see what happened. Okay, we'll see you. See you tomorrow.